everybody. We'll be starting in a couple minutes. For those that are showing up right now, I'll be talking about my current trades in the drawdown and a plan for an approach on those. Just for those of you just showing up, I'll be starting in about another minute or two. All right, guys. Good morning. It's just 2 after 9 a.m. Looks like a few of you showed up a little bit earlier today, which is awesome. So I'm gonna go ahead and start. And I know that you guys might be interested in knowing what's what's going on with my current situation. I'm in, I think it's about 5% drawdown. So as you know that with my streams, I start out by talking about my current open trades. Um, and you can see that, yes, I'm still in profit, but I'm in drawdown right now. And right now I'm looking at about 6%. I'm not scared. This is normal. This is normal activity. Well, somewhat normal. And I'll get into what's normal and what's not of the current market condition. And unfortunately, yes, I've been in drawdown since the 28th of February, and I'm just gonna have to wait it out. So what's normal about this situation with so many trades in? You may be wanting to ask me, or asking yourself in general, why do I have so many trades in? Well, this is just how the nature of my strategy and my idea work together. Yes, my worst trade right now is at about 200 pip drawdown. Some of you may think that's crazy to keep adding to a position like this over a longer period of time. And when is it going to reverse? You probably think that it's crazy to be holding on to a position when the trend is clearly up, and I mean that's pretty obvious that the trend is up. Um, but the idea is that how the euro pound behaves is eventually it will have a pullback, and a large one. We've had some pullbacks here, 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 and here. Also a small one there. But they haven't been substantial enough, and I'll get into why they haven't been substantial. Because there's usually a reason for everything, even in trading. Things happen, and they're happening for a reason. And knowing that helps me understand and helps calm me down when I get into situations like this where I'm in 6% drawdown, which is technically isn't that much, but it still is more than what I typically have. So with that being said, let's get into the nitty-gritties of what's going on here. Okay, so you see my original positions on the euro pound. I had a couple of close out early because of an EA error. But we have order 1 here. So order 1 was entered there right at this point. And then order 2, 3, 4, 5, and then just a ton of them after that. Okay, so the idea is to wait for that pullback to happen, and that's what what my EA is looking for, and doesn't always get the places right. Now in that recovery, we did have a close closeout here at this level. So there would only been 1, 2, and 3 trades in, and then pull a 50 pips total profit right there. It was real close. It was like 40, 45 pips. Didn't hit enough. So the next area for pullback was here. And you can actually see this too. There was a reversal candle here. There was also an inside candle at this point, and there was a pullback. It was really small, not large enough uh, for us to actually hit profit. Um, then there was another pullback inside a reversal candle, bearish engulfing. Did push back a little bit, not much. Bearish inside candle set up here, a bearish inside candle set up here. And you can see that the market or the pair did push down a bit at these places. It's just the pullback was so small, and the reason why the pullback was so small is because of the pressure that the pound is continuing to get from the fundamental side of trading. The political scene over in the UK is still pretty bad, especially with the talks of when the UK is officially leaving uh, the EU. And so because of that pressure, it's causing a lot of downward pushing on the pound. And you can see that happening on, not as much on the pound CAD, but on the pound USD. Now, if you guys just scroll out and you can see what's been happening here in recent memory, it's been just going straight down. Almost no pullbacks. The pullbacks have been quite small. And again, it's because of that fundamental pressure that the Brexit continues to put on the pound. Um, that hasn't had, there's no real stopping of that or slowing of that yet. We are seeing a small pushback candle here with a potential pullback on the upside. The reason why I'm looking at this candle right here. This is a really good indication candle. It's right at the support down here. There was a wick on it. It's very good body, full body candle with and there's definitely a potential for it to shoot higher, break these highs here, and to continue up. So that's what I'm hoping for, really, because the euro pound has been getting so much pressure from just the pound in general. There hasn't been a lot of up and down or trend direction on the euro yet. As you can see, just by looking at the price action, up, down, up, and who knows if it will continue to break to push up. It did break these last levels here, right here. So it did break that level. We'll see if it continues up. But it has been ranging, and so this pair has not been driving my euro pound trades that much. It's been the pound in its downtrend in a big way. So we'll see if that shapes up. We're about 200 pips. As you guys know, I do have a stop loss in place, and that is a 500 pip stop loss on my orders, on each order. So that means that order one, which is here, has a 500 pip stop loss. Right now, current market, it's about 190. So I still have a lot of extra room to go here before I start closing out trades and accepting that loss. Okay, so that's my plan. Is I understand why the pair is moving the way it does. Now you guys need to do that as well. You need to, when something is going against you or going in your favor, you shouldn't just look at it and take it for what it is. You should try to understand why you're making the profit you are or why you're in the loss that you are, so you know what's actually driving the market. That's pretty important to know, and it will help you dissect your trades and your positions while they're happening and also after the fact too, so you can become potentially a better trader. Okay, so Norbert, uh, Euro had a good inflation number. Maybe that is the reason. There's a lot of different reasons that could be that could have happened, but I definitely think it's the political climate that's on the pound that's driving this up. It's not you guys will notice that the pound has been a huge pressure on the euro pound pair for quite some time now, and I think it will continue to be until the Brexit situation is settled, which could be a long time. All right, so what we're looking at now, before I continue on, is the inside candle again set up here. There's one here. There's also one here. So this pair is wanting to go down at some point. It's just not finding that place yet, and so we're going to continue have to wait it out and see what happens. All right, so let's move on to my next pair, and then we'll get into what the plan today is. Uh, and let's see. So today we're going to go over episode 6. Um, and it's going to be live trading update. Plan for the current for the future drawdown. Plan for current and future drawdown. And how to create a good in-depth trading plan. We'll go over that a little bit later on. Okay. So here is the pound CAD. Now this is my other pair that I trade, and I'm going to explain something to you guys because you'll see that trade 1 was here, right? Trade 2 and trade 3. Now you guys know that I'm on a 20 pip grid most of the time, but I actually wait for the candle close before I enter trades to help with volatility and bouncing of the market. Now, the bouncing of the market can be a little difficult to deal with, or the volatility. So that's why I waited out and potentially increase my grid size, so I don't get caught out in in trades that go against me quickly. So you can see here that my grid size is a little bit wider. From order 1 to order 2, it's about 22 pips, including spread, and then order 2 to order 3, it's about 30 pips. And actually, I got right in on the bounce there, so I'm hoping to get out of at least this trade or this pair at some point soon. Okay, so that's the plan. I'm gonna wait out. I need a push down of about the 86.5 or so level, 0.865. So that's a pretty good push down, unfortunately, that I need. That's about 85, maybe 100 pips, um, and it can easily happen at any point. We just need some pressure to be taken off the pound, which could be a start of it right now with the way that things are looking on at least the price action. But we'll need some changes on the fundamental side, the climate over in the UK, to really change the bias of the short bias that's happening right now. Okay, so that's my trades, and looking not great, but I'm gonna have to be patient and wait it out. And I'll get into more about the patience and the trading plan that we're gonna talk about really for the next probably 30 minutes. So the how to create a good in-depth trading plan is not the easiest thing to do, I guess. Um, because where do you start? How do you start? Um, what do you look for? What do you not? What are the downfalls? What are the drawbacks? What are the positives? All that kind of stuff. Because I find that a lot of traders actually fall into that same trap where they go from system to system and they don't know uh, where to stop or when to stop. And a lot of times they'll see something and that catches their eye, like a shiny object, and they'll buy it or they'll use it that system, for example, and it will work for a little bit, and then it fails after a while, um, and then they move on to the next thing, and it's a constant process where it's never ending, really. And you'll find out that every system has strengths and weaknesses, and that's why you'll get that kind of behavior where it's profitable for a little bit of time, and then it's not, or it starts losing, and it seems like it's just impossible to find a profitable system. Well, you guys are probably finding out that it's not just about the system; it's about um, the methodology of that system that you're trading. It's the trader in general, what positions that he's taking, the discretion that's involved in taking those positions. Um, it's about the money management, the risk management as well, and so many other things. It's also about the emotions on that side as well. When to close out trades, how large the stop loss, what's the profit, how much should the profit be, and making those decisions based on what you're seeing on the price or even with the system that you're using. So we're going to start out where I think you should start out, and And it's probably where you initially kind of fall towards anyways, and that is a system. So you need to find a good system to start looking at. And I know that a lot of people may disagree with me that it's about getting a good or understanding good money management um, characteristics in trading. Um, and I don't think it's just about a money management. I mean, you can't just peg one thing as the most important thing in trading when there are so many things that come together as a whole that make up a good trader or good trading in general. Um, so I'm going to start with system because I feel like that is a good place to start investigating trading and trading types and styles and things like that. So finding a system that that has potential is not easy because there's you can go on forexfactory.com, uh, which we'll do now. Okay, so you can even just go to the forums and you go to trading systems. And I'm just using Forex Factory as an example. And you'll see that a lot of people are showing their performance and also sharing their system as well in template. And you get an idea of how they trade, and it's kind of helpful. You can kind of do that. I also like a place called, and I've mentioned this last time in my stream, forexwinners.com, because there are systems that have reviews. And on the Forex Factory, you can kind of follow a thread there and see how traders are doing. But I like forexwinners.com because it kind of gives you a better starting point for what's good and what's bad without having to read through a bunch of information or having really cherry-picked trades, which a lot of traders will do on forexfactory.com. Um, and that's why I'm kind of here is doing a video stream so you can actually see all the strengths and weaknesses of my trading and how I approach. So here's just an indicator. It's called pinkish trend, right? I mean, it looks pretty simple, and you can check this out and download it and you click on it, you can see the rating here. Has 7 votes with 4 stars. Okay, so we install that onto our platform and we look at it to see if there's any potential. Um, we could trade it. We can load it on chart. We can load it on the 1 minute to see if it repaints, if the actual indicator is any good in itself. Um, and then we start looking at whatever recent history. So I'm going to go ahead and do that now. So bear with me, and I'm going to do this. And I did this last time as well, but I'm going to go a little deeper into the process of where I'm going with this, and where we go after exploring the system and what the next step is. So 0301. And now I got to wait about 13 seconds for so I can actually download the file. Okay, so while I'm waiting for that, let's see. So Scott Gregg, just sell when you overbought and buy when oversold. I use RSI and MACD for that entry. Doesn't matter all that much in my strategy as long as it is on the 3-hour chart. Yeah, I mean, Scott Gregg, there's a ton of overbought, oversold uh, indicators out there. I mean, RSI is one of them. You could also use the CCI, the stochastic. There's tons of them. Um, 8 out of 10 of the trades are winners over the last 10 for me. Do you have my FX book, Scott Gregg? Uh, yeah, great results, Scott Gregg. That's awesome. So congrats to you. Um, keep an eye on that on your win rate because things could be going well for you now, um, but you never know what the future may entail. And so that's why I'm going to be getting into some of the research behind that, so you can better calculate where your performance may go in the future. So I'm still waiting for this for some reason. Um, okay, now there we go. Okay, pinkish trend. Now this might be not be the best indicator in the world, guys, to go off of. It's the first thing that popped up. So I'm gonna go ahead and install that. It's just one indicator, so it's nothing really intense. And so I'm gonna open my folder, my brokers folder. Going to click on MQL4 and indicators. So we're going to put this in the indicators folder. You can see it's pinkish trend, and now it's placed in there. Okay, it's in the folder. You close it down. I'm also going to close down this as well, and the broker, because once you close down the broker, it will register that the indicator's in there. Um, so I just have to wait for it to reload back up. And I'm not sure if I clicked it. So sorry for the wait. Okay, here it is. I guess my computer's going a little slow right now since I have so many programs running in the background. Come on. Okay. All right, so I loaded up the pinkish trend. What a name, right? So we're gonna see since it's based on trend. Trend is in the title. I'm gonna run it on or test it at least just on the Euro US dollar for now. Pinkish trend. Okay, there it is. Okay, so we can see we can see the candlesticks now, right? And we can mark where kind of explore how this indicator works. Now, there's one way to do that. You can go to the 1 minute, and you can see when the indicator changes colors because it's a color-based indicator. And you can see the candlesticks, I guess. You can also run it on line charts or even on bar charts as well. I think it's meant to be used on a bar chart. And usually with these kinds of indicators is if you want an entry, for example, the entry wouldn't be until the next candle. So once it changes colors, you have to wait for the close of the candle before you can enter on the next before you can enter, because what can happen is if the candle doesn't close, a lot of times these indicators can repaint and they don't really paint the history correctly, or previous history. So keep that in mind that usually these kinds of indicators require a candle close before you can enter. So here we actually had a pretty good run. So I'm going to turn back to the candlesticks. You can see that the entry point on this area, it went 87 pips total, right? That's great. But then it went back down and eventually changed colors, and we would have only come out with 25 pips, all right? But that's still fine. We have locked in 25 pips, and it went up 87. So when you're thinking about that, you're thinking, okay, well, 25 pips is great, and if I just using the indicator by itself, that's one thing. But how am I able to potentially get more pips when it already moved up 88? Is it possible that I can find another indicator in combination with this one that I'm using right now to potentially get out of trades a little bit earlier? So that's when you start looking at other potential indicators. Now we could use, let's see, could add a couple of other indicators to see if they help at all. They could also do uh, some custom indicators to see if any trend indicators work at helping us get out. I mean, there's something that you could do here, but just using the MACD is you can use the EMA on the MACD as an indication as well. I mean, that's a way to that's something that you could explore. Is this a good place to exit? Uh, I'm looking at this area. So once the bars close below the EMA line, then that might be a good indication to jump out of the trade. So that would give us an extra roughly 25 pips. But it goes further than that. Is this a one-time kind of scenario? Is this something that you should explore more, or is this the best at the time that it pulled out the most pips? It's just a one-time deal, and so that's why you backtest. You need to look in the previous history to see what shows some positive results over maybe a longer period of time. Okay, so let's move on um, to the next color change, and you'll see here this would be our entry point. Now this one didn't turn out quite as nice, but you still came out with a break even or roughly pretty close. It was about 4 pips profit. All right, so you came out at break even, but the move did go 37 pips. So that's unfortunate that you were in profit of 37 pips and then you had to close out. So you can see again on the MACD to see what happened here. And you see that it did close above the line there, and I would probably wait for that candle close. So I would probably look at an exit right there, which would only give us another, uh, it'd be about the same. It's the same difference. So you come out with still 5 pips. At least it's not a loss, guys. At least it's not a loss. And then you'll go to the current situation, which is right now, which the euro is moving up in a pretty big way, and the color has not changed. And right now, you did have a potential exit here. If you're using the EMA on the MA on the MACD, you did have a close there, so this would be a potential exit, and that would be for about 22 pips. All right, so you can see there, then that's a trade-off because if you would have exited there, it continued to go up, and you would have lost out on another potentially 71 pips. Yes, Crash Up. I can do that. I can do that. A real quick synopsis on that again. But right now, I'm speaking about a trading plan. How to create a trading plan to help traders out and to help understand my mentality and why I have this approach, and why I'm not scared, and also why I find this to be somewhat normal behavior, and for me to trade like this. This is not something that I'm going off on a whim, um, or I'm being drastic, or things like that. So this is all calculated. Okay. So yeah, I'm talking about a trading plan and how to approach it and how to develop it. So here we go again. Trade-offs. That's what you need to do is experiment with the indicators. See how they work on different time frames. Um, and explore the possibilities with them. Okay, so let's move back just a little bit to the next option. Now, since this is a trending indicator, uh, we need to pick it. We need to start looking at trending pairs. Now, you guys need to try to either search on Google, or you can also search on MyFXBook, where they talk about pairs and the heaviest trending pairs. There's also a lot of other websites that do that as well. But a good trending pairs are, for example, like the Euro US dollar, the Euro Japanese yen, the UJ, the pound USD, and there's a lot more. Those are just some of the ones that you can look at that trend in big ways. And so when you're looking for a trend system or a trading system that relies on trends, then you need to be looking at and potentially be trading the correct or pairs that have a trending kind of personality. Um, that trend a lot more than, say, for example, the euro pound. The euro pound is not it's not a heavily trending pair, at least the majority of the time. Now you'll find that most pairs don't trend off and on, and we don't really know when they're trending until after the fact. But some do trend a lot more than others, and that's something that you also need to explore in when developing a strategy um, that's for the longer term. Okay, so here we have our entry point, okay, and our exit, at least with the actual indicator. So that means that with the pink, we're looking at the pink color, right? When it changes color. Now, I don't know what this indicator is based on. I don't know what it's based on. I could try to see what it may be based on. It looks like it could be something similar to the MACD. Why is that? Because looking at when the MACD goes below the zero level, right? You see that the change of color happens right about that time. You see when the MACD changes back above the zero level, you'll see that it changed very similar. So it won't be always the case, but you can also see that the similar thing happened here at this point, MACD. So you see that this indicator may have the MACD based, it may be MACD based on in its methodology or how it's built. So whoever built this custom indicator might have used something like the MACD to develop it. And so that's why it's good to understand where these custom indicators come from, so you can properly mix them with other indicators um, that could potentially give you more profit in the future. Okay. So that being said, uh, entry, exit, and did the MACD help us? Well, it did change here, but also the indicator did. So what about the little red EMA or MA that's going on here? Um, that kind of shows you, I guess, some of the volume that's happening with the current pair. And like we were saying before, the bars when they start moving above the red line, red MA line here, then that's a potential for to exit the position. So that would be somewhere in here. So we can actually mark that. Okay. So I like to mark it after the candle after it has closed. Closed, so it closed right here above the red MA line, and that would be an exit right there. Okay. So that's not very much. That's not a lot of profit, unfortunately. That's only 10 pips. Man, you might be thinking, well, that's not so bad. We're still coming out with 10 pips profit, right? But we still had 57 pips that it moved before it bounced up from there. Is there any indicator that we can find? Let's see. Let's see if we can find something that can work. Maybe we should just start looking at. Uh, let's see. Let's try the SAR. Is that going to help us? Not really. You can see here that if we're zooming in, you see that the SAR indicator would have gotten us out slightly earlier. So we would have been able to take 18 pips profit, all right, with that particular trade. But you should also go and check some of the previous trades as well to see if the SAR helped would have helped those. So you see the entry here. The first exit for the SAR would have been on this candle. All right, so it didn't really help us much there because although it still gave us profit, about 16 pips. But in the MACD situation would have been a lot better without what I just was telling you with entering, exiting trades once the bars go below the MA line. So it would have helped us there. So that's why we have to kind of explore our options and the different indicators, and it helps to know how these indicators work on top of that, um, so you can better gauge. So let's try to see if we can find something that's even better. You could try some moving averages and see uh, what could help you there. Let's try a 14 moving average. Okay, so you could do a close of the moving average above above the moving average, so a candle close. So that would give us still about 18 pips. So the parabolic SAR and the EMA or uh, the EMA moving average 14 would have given us about the same result. Um, And what about trades like this? So moving out into things that can happen is what about this? I mean, that's an unfortunate signal, right? Because it changed colors, but it's only one candle, so that means it was an instant loss on the next candle because the next candle was green, right? So red and green. How big of a loss would that have been? All right, let's give it a check. So you know that we'd enter the trade the candle after. So the opening of the candle after. So we wait for this candle to close, enter the candle after, and it didn't turn out well, right? So we'd exit the candle right after, exit for a loss, and that would be only a 3.7 pips loss. Not bad. And we'd enter on the buy side, right? Okay, so it would go up 40. It went up 46 pips. Okay, so that's pretty good. What about exits here? So if we're looking at the MACD, since we've added a couple of different indicators that we can look at now. Now, these are not maybe not the best indicators to use, but I'm just just using it as an example. You can't just say, "Oh, Ryan's picking the worst indicators to work with this situation." I'm using them as an example for your uh, to give you ideas of how to develop a system yourself. Uh, so we're now looking at the SAR indicator, we're looking at the MACD, and we're looking at a 14 uh, moving average. Okay, and we see that the 14 moving average didn't do so well for us because the candle closed below the moving average here, which would have ended up giving us a small profit or loss. I think it would have been a small, look about break even actually. Okay, so the moving average didn't work so well there. Let's see the SAR. Um, and the SAR was already in a downtrend at that time. So maybe you should even question at this point if you should even take this trade. Is this a good trade if another indicator is showing its potential on the downside? You could also look on the MACD, and the MACD is showing it's on the upside. So you're having a bit of a mix here. And you can also look at the price action. Now, if we're not ignoring the price, you can see that it's been moving up and moving down. So it's a bit of a range in this area. So you might be thinking, well, it's a bit mixed. If indicators are showing me that this is moving down, the moving average is pretty close to the price in this area. The MACD is not incredibly on the upside at this point. So maybe this is not a good place to enter. Those are questions that you should ask yourself. So let's say that we did take this position, even though the SAR was saying it's on the downside. Now, eventually, it did go on the upside at this point, and then it went back on the downside right here. So it didn't really help us out very much in this situation either. What about the MACD? Let's explore that. MACD was on the upside, 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 and then eventually it did move back down right here. So again, not much that we could have done in this situation. We would have come out with a small profit, maybe 10 pips here, if we would have used the MACD, and a small or a potential small break even or loss if we were using the moving average. And then potentially not even taking the trade in general if we were using the SAR. Okay, so that's what you should do with your systems. And I'm using that as an example so you can start to explore what works. Now, on top of that, now if we want to take this to a deeper level, um, which I think you should, let's scroll back to as far as we can with the actual indicator. We're going to remove the others. Okay, so how far back can we scroll? Is it indefinitely? It looks like it's pretty far back. Okay, so since it goes pretty far back, and we're now in 2015. Okay, so this doesn't look like there's a lot of indicators, custom indicators, don't allow you to at least look very far back in history, but this one happens to let you do that. So how do we work with that? Well, you can actually go in, get a calculator out. Okay, so I'm getting a calculator, and you could write the entries and the exits just using the indicator by itself to see if there's any potential with this indicator. And what's the profit? Now, you're not going to include spread. This is just going to give you an idea. So 37 pips. So you write that down. And then you can go back to the next one and you can say that, okay, that's a buy entry. And this is the exit. So that is a 10 pips loss. So you can do minus 10. And you can say that this was a short position here and you had to exit, all right, for a 4 pips loss. Okay, and then you can just keep doing this over and over again and to see if this indicator is any good. Now you can see that the indicator actually tries to work with um, fake outs in the market. Um, so you're not constantly buying and selling and losing and having losing trades. So it's good at filtering the market just by itself. It's decent. It's maybe not the best indicator in the world, but it can potentially be helpful. I mean, you can automatically just by looking that this is a profitable trade, this is a really profitable position, this is really profitable. This is not. This is looks like it has multiple losses in this area. They don't look huge. There's a loss here. There's a profitable trade in this area. And you don't necessarily have to get out a calculator unless you really want to get down to the nitty gritties to try to find all the possible weaknesses or how exactly or a better idea of what your performance would be like. And you really need to look at the losing times. There's a big problem with traders these days, and I had the same problem starting out was or for many years. I didn't want to find the weaknesses of a trading system. I don't know. I wanted to stay naive or something. I was like hiding from the fact that it may be a losing system. It may not be profitable. Um, but right now, in the current market, I am profiting, and it's like I'm like thriving or feeding off of that, and I don't want to see what the weaknesses of the system are, especially if it's a system that I bought or if it's a system that I traded or had good reviews. I would be very trusting in that system, thinking that well, if it's been used, if it's been reviewed, then I don't really have to seek out the weaknesses in it. That's so not true. You should find out for yourself because that's the only way you're going to really know if a system works or not is by exploring it yourself. Um, don't trust somebody online. Don't trust a salesman that's trying to sell you something. Don't even trust a mentor. If somebody is offering training to you for a certain price, don't even trust them until they actually can show you. That's exactly what I was doing before when I was offering mentoring courses was I would give an evaluation um, or consultation of what I do and how I do it, so the trader can get an idea of my approach and how I can potentially profit in the market. Okay, so if we're just looking real briefly, trying to see if this indicator has any potential, we're seeing that it does. We're seeing that it does have some decent potential in these in a very trending type of market. So we know that the euro US dollar can show decent results, but let's see what some of the other pairs do. So we're going to try the pound the pound US dollar, and we're going to load this little weird pinkish trend onto it as well, and see if it shows us any better results. Okay, so typically the pound moves in bigger waves. It's also a lot of times more volatile. You can see that we had a nice move here, but losing trades in this group. When you see the candles changing colors quite a bit, that means that we have a series of losing trades. We want the longer moves in trade and trading, right? So it's very likely that these types of moves on this indicator will outweigh the losses in the smaller area. But these trending moves have to be substantial. So guys, this is the beginning of looking for a system that you can use. But you're probably already doing something like this with other systems. Of course, you're going to dissect it a bit. But like, if you really want to get down to it, you got to go deeper to the next level. And in doing that, you should try to use the tester and load the indicator up on the tester so you can go back years. We're talking about 2010, 2011, 12, 13. So you can see if this indicator or strategy or candle setup works and has worked over a long period of time. So that's with the system. That's where you want to start with a system. Um, and how you want to explore that system. You want to explore every possibility with it, including the weaknesses, the strengths, when it's profitable, when it's not, because the more testing that you do, the more you'll find out about when the profitable times are, and it might give you some hints into uh, trading, being able to only trade those times. Because as a human, we in trading we have discretion, so we can pick and choose our trades, and that can be very helpful. Okay, so money management next. So money management is is something that I just put for money management. Uh, it also can include risk management. Okay, risk management and money management are kind of built into the same type of category. Um, where money management, you're basically it's what you're doing to it's the whole picture. So that includes the lots per trade, the stop loss, the take profit, the risk per trade, uh, all that stuff that has to do with closing and opening orders in general. Okay, and in risk management, also it's tied into it, and that's basically how much percentage of your account or lot size, you could say, that you're using. So I need to get the so you see I have 0.03, and so that's included in the risk management. And risk management, and the reason why it has, I guess, it has its own little category is because of the importance with it. Um, and I find that most people over risk their accounts. It's 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 like contagious. It's pretty much everybody does it, and it's because we can. It's too easy to do it. Because you could just pull up one-click trading and it says one lot. I could just enter one lot right now just by clicking a button. It's so tempting to have that control of not over risking your account. And I find a lot of traders that don't really know what they're doing will do that. Some traders that do know what they're doing understand the risks involved in doing that, but they still continue to lose. Some of them actually have success. It's very few. Now, those successful traders kind of give a lot of other traders, or the majority, um, I guess, bad advice, or a bad example, because we try to copy or emulate uh, that person or strategy, and we just can't do the same thing, and so we end up losing. So a very few amount of people can do high risk trading, and they can do it profitably. That means withdrawing your funds every so often after you make profit. So, for example, if you're a trader that makes 100% per month, which is really difficult to do on a consistent basis, so that trader is likely risking 100% of their account as well. So if they have a $5,000 account and they potentially can grow that account by 5,000, so making it 10,000 in a month, but they also potentially could lose it all too. If the trader understands that, that's okay. I don't really think that's great trading. I don't think that's really called trading in general, because it's more like gambling. Because gambling is basically when all your money is on the table and you don't have any strategy, long-term strategy. You always know that what the outcome is mixed. There's a chance that you could lose. The future's unknown. Um, and that's the thing with trading, is that we there's always some kind of risk involved, but we need to cut back on that so it's more controlled and it's more of a strategy involved. And you've heard it before, trading like a business, instead of just gambling trying to get fast rewards. um, and but if you can withdraw your balance, um, you potentially can come out positive by trading that way. It's very few people that do it. I don't recommend it. I hope that you don't fall into that trap as well. Maybe you already have. I know I have in the past. So, all right. There there are some things that you can do. All right. So I know that you guys understand or or don't have a lot of money to trade with. Most of you of retail traders don't have uh, more than 10,000, right? So that's the reason why we high risk trade, is so we can get to that point where we can pull back our risk on a larger account, right? Um, And that's the ultimate goal. That's my goal as well. You can see that I have 6,600. That's not substantial enough. I need about 20 to 50,000 in order to come out with a substantial income making 3 to 5% per month. Unfortunately, I can't necessarily do that yet, and I have to be patient. So what can you do to get to that point? Well, there's a couple of options. You can use some lines of credit to borrow some money, but I don't recommend that because that potentially could make you go bankrupt if you borrow 20, 30,000 or more. So maybe not the best choice. So this is when the high risk trading could take effect and you could potentially use it to your advantage. And I have in the past, and I'm going to tell you my experience now with high risk trading and how it can work, at least from my experience. Uh, so I traded at a broker. This was Belfour FX. Don't use them. I think that they're a scam broker anyways. I don't think they're available anymore. Um, but they gave me a large bonus. It was something like 70 to 100% of my account. So I deposited 5,000. They gave me 5,000, so I had 10,000 altogether. Now, I wasn't able to withdraw that $5,000 that they gave me as a bonus, but I was able to use it as leverage on the account. So I was able to trade my account like it was $10,000. But unfortunately, if I had a loss, I would lose a lot more than that because it is a bonus and it's non-withdrawable. I understood this, and I knew that I had a strategy that I could utilize that broker with the 400 to 1 leverage that it had, the scalping strategy. And that strategy ended up looking like this. I actually still have the MyFX book of it. So it was a scalping strategy, and I used it for quite a few months. And you can see here low drawdown and high profit of 70%, or roughly pretty close to 70%. And I was able to pull out of my profit. You can see that my account at the end was $17,000, but I only withdrew 7,500. I think that was my standard account. Um, so I withdrew my profit of my initial balance of 5,000 and came out with a profit of 7,500. Okay, so that's how I was able to use that bonus in my favor, was using a strategy that could take advantage of the leverage, which I guess it was 500 to 1, um, and come out with pretty big profit. But the profit was substantial on the account size that I had, which was 17,000. But you know that the portion of that was the bonus. So I came out with a profit of $5,000 and withdrew everything, and it worked out in my favor. And I came out with a $5,000 profit, right? Because I paid off my broker, and I also got to keep a portion of the profits as well. Um, and that was it. Okay, so that's how I was able to use the broker bonus in my favor. I know that there's a lot of traders that don't like bonuses, and I typically don't as well. But if you're wanting to try to work with a small account, like $1,000, $5,000, this is something that you can use. And look for brokers that have good reviews. Um, and that, for example, let me show you one that I'm looking into right now. Now, the problem with this broker is that it's unregulated. All right, guys, so you got to keep that in mind for when trading. It is an unregulated broker means that if they somehow steal your money, it's going to be a lot harder to get it in the end. This is a fairly new broker. They've been around since 2015, LMFX, and this is for I'm speaking to the U.S. traders. The U.S. traders in general, because we don't have a lot of options. You know that we can't, we have the FIFO uh, issue, so we can't hedge our trades, buy and sells in at the same time. Uh, we have to close our first orders out first. When we're trying to basket trade, we only have 50 to 1 leverage, and so on and so forth. So a lot of problems. And this broker has 1,000 to 1 leverage, which is very unusual for a broker that is currently accepting US clients. Um, and 100% 100% bonus. Now, if you go look for LMFX and you check to see what their reviews are. Oops. you'll see that Forex Peace Army, which I mentioned to you guys before, will pop up. And Forex Peace Army, I feel like is a pretty legitimate site. I've been looking at them for the last 8 years or so. Um, and there's usually a lot of good information on there, and the users do speak their mind and will be here to tell you if a broker is bad or scamming them or they've lost their money. And you can see that this broker has 16 reviews. Okay, not a lot, but it's for over a 4-star rating. And so it's something that currently I would trust. Now, most of the time, these kind of brokers that are accepting U.S. clients, they will drop them at some point. And the reason for that is because once they get popular enough, then traders, try to blame the broker for losing their funds, meaning that they lost their funds legitimately trading the market, the user or trader did, and they tried to get their money back by doing a chargeback or by complaining to the CFTC, and so on and so forth. And once, I mean, a few complaints are not going to be a big deal, but once the majority gets to that point, then the broker could potentially be might be forced to drop their U.S. clients. That usually takes years to do, like it did at Forex Broker Inc. It took quite a long time, like 5 years before that happened. All right, so there's a lot of potential here for this broker, and I plan to potentially use it in the coming weeks. All right, so uh, current trades are still not looking great, and I'm going to come back uh, to the stream and see if there's any comments. Do you make the EA's indicators you use available? This is from Dan Smith. No, Dan, actually, no, I don't. I did sell training and EAs before I started this stream. Now, since I've promoted this stream on forexfactory.com, I don't want to get a titled my screen name, which is Cubby Be Good on Forex Factory. I don't want to get it titled as a commercial user there. I care enough to stay far away from that. And so that's why I'm not selling any training or any EAs to any of the users that are watching this stream. Um, and yeah, that's pretty much where I'm going right now. This is a stream showing you, talking about the markets, showing you how to trade. If you look at some of my previous streams, you'll see that I show you how to trade my system, exactly how my EA does as well. So my EA trades my system slightly different than I would trade my system manually. But I show you how everything works and how it does that, so you can copy me as I go, or just get ideas of how to approach the market uh, and help with the system that you're currently trading, whether it's your own or one that you bought or one that you found online. Just giving you some ideas to make you think a little bit, because I don't feel like traders think enough in their trading. Sometimes they can think too much, and that's when the emotional side comes. So I guess the extremes are the problem here. When you're thinking too much or you're thinking too little, it needs to be a good balance. It needs to be controlled, and having that control helps in understanding what you're doing completely. So that means that understanding why you've chosen the indicators for your system. Why do you have 3 indicators on your system, and why do they complement each other? Step one. Step two, risk management. Where should you start? You should always start smaller, more conservative, and then when you see things are moving better, you can up the risk a little bit, but it still should be controlled, and you should understand when losses happen, how much you're going to lose, and how is it going to relate to your profit. Um, and this is something that you should expand on, because so you are able to withstand periods of streams of losses. If it's a stop loss system, how often do those stop losses happen? Are you able to control them? Is the profit going to outweigh them in the longer term? Has it done that in the past? Those are all questions that you should ask yourself. Um, and then how will I approach the market emotionally? Uh, how much screen time should I have? Um, how often should I be getting up to look at my trades? Am I uncomfortable when I'm sleeping because I keep thinking about my trades? If that's the case, then you have not asked yourself all the questions. that you should be asking about your system. Um, does it do this right? Does it do that right? Am I prepared on this? Because that means that if you're having trouble sleeping at night, that means that your risk is either too high or you don't trust the system that you're using. And you need to get to a point where you're able to do that, because that's not healthy, for one. You can't live a healthy life by constantly worrying about your trades. And there's always an explanation why you're worrying about them. And usually, in most cases, I find it to be about risk because you don't have a thought out plan for whatever trade that you're uh, restless about. Um, and you are stressing out about it. You need to find a balance where you are not stressing about it. And likely that has to do with risk. If it was cut down a lot and you're not going to lose as much as you would with a higher risk, then that usually gives you more comfort. Um, so trading shouldn't be stressful. It shouldn't be stressful. If you're finding yourself being stressed out all the time, you're doing something wrong. It's not supposed to be like that. Um, and there's times that I still stress out. I'm not a superhuman. It still happens. When this starts to go up or continue to go against me, for example, if it goes up another 100, 200 pips, that's when I'm going to start getting a little bit uptight. But I understand that that's part of the system that I've developed, and that there is weaknesses. There are weaknesses with it, and that means that if it continues to go up against me, I have a stop loss in place, and I have to accept that loss, and that could be substantial. I don't know what it's going to be, but most of the time, it's my stop loss is not hit. That could easily change. I'm never protected, but um, from what I understand and all the testing that I've done, that's what I've I've seen and understand to be the case. So I'll play things out and see how it goes. Um, and I am prepared for what might take place. Um, no system is perfect. We all have losses, and can we handle them in the system that we're trading? So with that being said, guys, I think that's it for today. There's a lot more I can say about expanding on developing a system, a strategy, uh, a plan, a trading plan. And I think that I'm going to continue to talk a lot about that, um, especially the course of this, because you guys will be able to tell how stressed out I am in regards to this if this continues to move up, or if it continues to move down. If it does decide that it's going to push down from here, then I'll say, okay, that's what I've developed the system on. That eventually we'd have a substantial pullback, and honestly, I don't know when it would potentially happen. All right, but I'm planning on it happening at some point before this bottom order hits 500 pips. If it does, then I'll start closing out trades, and we'll move on from there. All right. So that's it for today. I'll see you guys back again on Monday at the same time, 9 a.m. Eastern Standard Time. I don't know what GMT that is. Um, but we'll see how these trades end up closing out for the day. Maybe we'll have some kind of pullback, and the pullback next week as well. On top of that would be nice. So hopefully you found this insightful. Give me a thumbs up if you did. Um, and I'm here to not I'm not selling anything. I'm not trying to uh, be arrogant because I don't have all the answers. I'm just trying to be helpful. I want this stream to be something where traders can look to have some of their questions answered. I want it to be potentially a stream where they find that they learn something that can help them in their strategy development or their trading journey, to give them that that profitable edge potentially, whether it's using my system or using a system that they're developing, or you're developing yourself. So, all right, well, I guess that's it for today, and I'll see you on Monday. Have a good day, guys. See ya. Bye.